I think we're live now. Somebody let me know. Live says 12 seconds. I said somebody let me know, and YouTube let me know. Now live. Now live. Okay. I'm out there. So we've got a few people on. We'll give it a few more minutes. A few more people show up. In the meantime, let's see what we have. First question is in 1, 2, 3, 4 parts. I have read it. The gist of the question is you got some people that are making a lot of money. You got other people that are making less money, and he's saying the distribution seems to be bimodal. I don't know if it is or isn't. But you've always had people making more money and some people making less money. It is not what you make that determines whether a market's going to be inflationary. It's what you spend. Those with higher incomes have a lower propensity to consume. So higher incomes have a lower propensity. So lower incomes tend to have a propensity to consume that is greater than their income. So we don't say 95%, we might say 105, 110%. They collect debt. Whereas higher income earners, the higher you go, the lower that propensity to spend becomes. They have a higher marginal propensity to save. There is an identity in economics which says income equals output. So you get inflationary pressure when people want to spend more than the economy produces, because higher income people do not spend all of their income. They are actually deflationary, not inflationary. It is those at the bottom of the distribution, 70% down, that live paycheck to paycheck and use credit. They spend more than their income. They are inflationary. So it's the other way around. It's lower incomes tend to be inflationary because of the identity that aggregate output equals aggregate income. And because of that, if you spend more than your income, you are contributing to inflation. That's not the highest income earners. So no, they're not inflationary. How could be explained discrepancy between two reports, EL and NPE? And EL and NPE. NPE shows 200K jobs a month in post-COVID time. Before it was just plus 10. I'm not sure what EL and NPE are. And you're saying 200K jobs a month in post-COVID time. If you mean non-farm payrolls, before it was just plus 10. No, it was not. No, I think your numbers are wrong there. If you're talking about non-farm payrolls. If not, I don't know what EL and NPE are. Unless you're referring to another country. I don't know. What is the source of the OAS information in the market outlook? You can get that off of Fred, or you can get it off of Koifin. I just use Koifin, which has a publicly facing side. You can get it off of there. Waiting for my CFA 4 chart. I will be ready as soon as the exam launch. Yeah, it's more of a mid to longer term strategy. Would like to know your thoughts on the recent TTC threat to strike. Would also like to know how you can achieve management and labor interest avoiding a strike. I've stated my opinion on strikes before. I believe they should be declared illegal, completely illegal on both sides. No management lockouts and no labor-led strikes. And whichever side starts it, the organizers should be thrown in jail and charged with racketeering. I do believe strikes should be illegal. If it is too much to throw the organizers in jail and one side decides to either lock out the workers or the other unions decide to strike, they should be open to civil lawsuits for private losses. So if a company decides to strike and I have a plant that serves the larger plant where they strike and I'm shut down and I lose money, I should be allowed to sue the union to make me whole. The federal government should be allowed to sue the union for lost income, for lost taxes, rather than put the burden on society. A strike is the sacrifice of the many for the benefit of the few. And in today's economy, where you have all of these interconnections, you have these tight supply chains. A strike by one company doesn't just affect one, it ripples through society and it hurts a bunch of people. It is an economic weapon of mass destruction. I believe that strikes should be just declared illegal, and if not, then the union should be open to being sued. I think that nobody wants to strike. Nobody wants to strike. The workers don't want to walk on the street and get no paycheck or $400 a week strike pay. Nobody wants that. Continue working under the old contract. You have I got a mosquito bite on my ankle here. You got 3 months between management and labor to work things out. If it doesn't work out, it goes to binding arbitration. It's done, period. But this idea of striking and costing the government taxpayer dollars, where now you're expecting other people to pick up the slack for that, and that the only winners out of that are the union workers themselves. They get all the gains from it, but society gets all the losses from it. It is the height of greed. You want to call management greedy. I think unions are the height of greed. The height of greed. So yeah, I would, if I were president of this land, I would declare all strikes illegal. I would lock up all strike organizers, and I would put legislation in place that says you cannot strike. You have 3 months to work it out. If you can't work it out, we're going to send in arbitrators, and then that's it. That's the end of it. You'll get what the arbitrators say you get, period. So yeah, I would shut that down pretty quickly. I'm pretty sure MicroStrategy can't do that with accounts receivable. Very suspicious and sketchy. Yeah, somebody sent me something on LinkedIn, and it was from, let's see if I can read it to you here. It was from an accounting firm online that had a treatment of it online, and it said, and I'll just read the part to you. A reporting entity could have an unconditional right to consideration before it invoices its customer, in which case the reporting entity should record an unbilled receivable. For example, this occur if a reporting entity has satisfied its performance obligations but has not yet issued the invoice. And that's if you have satisfied the requirements. In certain contracts, the fact that a reporting entity has issued an invoice does not necessarily mean it has, hang on, I lost it. In other words, the right to invoice and collect from the customer is not contingent upon performance, even though the reporting entity may have to refund all or a portion of the payment to the customer if it ultimately does not perform. A receivable is recorded in these situations with a corresponding credit to a contract liability, which may be referred to as deferred revenue. However, revenue is not recognized until the reporting entity has transferred control of goods or services. So what they're doing is they're increasing deferred revenue and increasing account receivable. So if you say, well, let's take out the account receivable, let's decrease the deferred revenue account, you end up with a current ratio still less than 1. So I don't know that it helps, but it looks suspicious, billed and billable. It's the first time I've come across the idea that you could say, well, I'm going to bill you in 12 months or in 11 months for 1 month, but I'm going to call it an account receivable today. I'm not an accountant, so you see that, you put a question mark beside it and you say, well, I'm going to have to ask an accountant if this is a thing. But it can be misleading on the level of assets that you have. Right. But I don't know that we'd be looking, if it wasn't for the Bitcoin thing, I don't know that anyone would seriously be looking at MicroStrategy as a player in the space that they're in, other than a bit player trying to squeeze in a space in which maybe, in the 90s, they seem to have something interesting, but now that everyone's doing it, it is a value destroying business. So I don't know that an analysis of MicroStrategy statements is even valid. Let's call that software mess on that side $2 billion and be done with it. That if they had no Bitcoin business and somebody offered $2 billion, I'm sure management would say, well, let's just take this. It's better than what we have. So give it $2 billion. The bigger problem is there is no leverage in MicroStrategy to the upside because it's fueled by debt that is convertible to equity. So if there is upside, it's going to be equity, dollar for dollar. If there's downside, it's going to be debt. So you're going to hurt really bad on the downside, but you're not going to do any better on the upside than if you own Bitcoin natively. And if you think of the loss that MicroStrategy is producing on the software business as a management expense, it's an ETF. It's an ETF with a terrible payoff on the downside, which means it should trade at a discount. So it should trade at $720 to $760 perhaps, certainly not $1,600, right? So and that's the big problem. Who cares about the rest of the statements, if this is funny or that's funny? It is what we would say immaterial. The Bitcoin holdings are the material thing. It's what, $15 billion against, if you take the cost of Bitcoin off their balance sheet, what do they got? Less than $1 billion of assets. It's immaterial. You would just ignore that. So who cares what they're doing on that side? But this guy, Saylor, he's greasy. Well, I mean, I say he's greasy. Based on the accounting fraud from the SEC in 2000, the willingness to engage in it, I mean, you must have done it. And then the tax fraud or the lying on your taxes to evade taxes. Is this a guy you want to trust? Number one, like you think about management, is this a guy you want to trust? I don't think so, but it is a cult. It is a cult following. So can you please comment on agency? What would you like me to comment on? That's a big question. Comment on what aspect of it? As far as if I would buy it, I own it. Would I buy more? Yeah, I'm comfortable with it. Still on the sidelines for AT&T. Yeah, AT&T moved out. Oxy moved in. So if you're going to sell puts, you're going to commit a certain amount of capital every month. So I'm just swapping out AT&T for Oxy at this point. I'm still committing the same capital on selling puts, but Oxy's just a better deal right now, given where its price is. I'd rather sell puts on Oxy, given a limited amount of capital that you dedicate towards selling puts. At some point, AT&T may move back in. Maybe it doesn't. Maybe in their next quarterly report, I look at it, I think, well, okay, so now we're going to sell $18 puts, or maybe I'll sell 19s. But at this point, Oxy has shown up, and AT&T's moved out. I'm good with that. How do you read a company's 10K? What key information should one focus on? Any tips and insights would be greatly appreciated. The first thing you want to do, it's always the 10K. Now, don't worry about 10Qs, even if there are 2 quarters that have been reported. The 10Qs are updates. The 10K has all the information in there. The first part always discusses the business. That's where you should spend a lot of time. The first 20 pages or so, 15 to 20 pages, discusses the business and the business model and basically how they make money. I don't know that you can understand the financial statements unless you understand how they make money. And if you agree with how they make money, if you think, okay, yeah, that's kind of a nice business model, or if you have some concerns about how they make money. But you should understand everything about their industry, which means as you're reading the 10K, you get to terminology you don't understand. Well, then that's as far as you go. You hit Google and you research that term. And you start reading about that till you hit a term you don't understand. Then you stop and you research that until you get to the end of that line. Then you back all the way up to the 10K and you say, okay, well, let's continue on. What's next? And that will take a week to 2 weeks, especially for a more complex company, to really understand what it is they do and how they make money. And oftentimes there'll be a story presented that you'll either say, I'm just not liking it, or you're already sold on the story because you already know the valuation is very, very low. For example, which are the kind of ones that I like the best, where the company is undervalued versus its peers, and the story is good. AT&T is a good example where the story is good. GM is another one where the story is good. I think it has a better story than Ford. I think it has a better story than Tesla. Year to date, GM has far outperformed Tesla, and I think that that continues on. Wow, I don't know if you can hear that in the background, but that's some heavy duty thunder we got going on here. I should say it's not uncommon for the power to go out in Costa Rica. It's not uncommon, but usually it goes out and then it comes back on, and then I just got to restart. So if I lose you on the live feed, if I lose you, give me about 3-4 minutes and there'll be another live. I'll jump back on and start another live feed, but it's not uncommon for the power to go out in a jungle country, right? So yeah, you start with you try to think about what's the story here. Can I tell a good story? And the story should be simple. If it's a complex story about, well, you're going to do this and then this will follow, and if this happens, and if it's too complex, it's not going to happen, or you don't understand it. It should be a very simple story that you can tell. Then have a look at the statements. I think cash flow is the most important. Have a look at the cash flows. There should be strong cash flow from operations, and there should be a plan, especially for a deep value company. There should be a plan to not so much, drive revenues, but rationalize. Plan to decrease costs, to realize synergies if there are recent mergers, and maybe a plan of how they return cash to shareholders, whether they're going to pay down debt first, pay the dividend, and whatever's left, you got your CapEx and buy back shares, however they plan to do it, some kind of strategy for that. But it always starts with understanding the company. Before you even look at the financials, what does this company do? And you got to have a good understanding of it, and then you got to agree with it. You got to say, well, that makes sense. Some companies make money by being extremely aggressive. And if you've ever been involved with aggressive companies and their pricing, it turns people off. So MicroStrategy is a good example of a company that's a little too aggressive. Bright Cove is a good example of that as well. If you're into video and you need a video server, there's a company called Bright Cove, which we used Bright Cove for a period of a year, and they lock you into these contracts where you can't cancel, and if you cancel, you still owe them. They lock you in, and they sell really hard to lock you in. They promise all sorts of things, and so you agree. And then after that, all those promises disappear. And every time you want something little, they start with it's $10,000. We could, $10,000. So we want something, one little file turned off. Yeah, $10,000. 10,000. Give me a break. 7,000. Come on. A couple of days later, it's 3,000. It's just you're locked in. Where are you going to go, right? So it's companies like that have that kind of heavy selling. They lock you in, and then they just rape you while you're there, they slowly disappear. That was our experience with Bright Cove, was that this is a shit company with, I don't know how these people sleep at night, because I know that their whole strategy is to lock you in and then fleece you for as much as you can. When you go from $10,000 to $3,000 in the space of 48 hours, I know you could have started at 3,000, but you didn't. You tried to start at 10, right? That pisses me off. That kind of stuff pisses me off. You look at MicroStrategy with these non-cancelable, non-refundable contracts. I disagree. I totally disagree with those kind of contracts, especially for services. What if you suck at your service? What if you told me that I could get something done and now I can't get something done? I'm stuck. Give me a break. Unless you can demonstrate to me that it cost you money when I agreed for 1 year, that you went ahead and spent some money because I was there for 1 year. If you can demonstrate that it costed you money for me to do that, then fine. But just to say you can't have your money back. Even if we suck, you can't have your money back. So if you look at the categories of sales on MicroStrategy statements, you see negative numbers year over year. They are, companies like that destroy value because the contract, the transaction is paramount. The relationship is secondary. Anytime a business puts the transaction as paramount and the relationship second, it's just a matter of time. I've had my share of companies like that where it's just like, come on, man, like, give me a break. I mean, let's say it was a data service, and I subscribed for a year and I had access to all the data on day one. Okay, I get it. Okay. I mean, I basically had access to everything you have to offer. Okay, fine. I can understand that. But when I'm using a service over a period of time, and after 2 months, I say, this is not working for me. What about the next 10 months says that I owe you anything other than we agreed? Well, where's the customer service in that? I guess their thinking is that, well, we don't satisfy your needs. We're never going to see you again anyway. So what do we care if we piss you off? Tough shit. You can't have anything and you owe us money and we'll sue you if you don't pay us. Maybe that's the thinking. I just don't think I could do that. How would the U.S. be unable to continuously pay the high interest when the debt ceiling can be kept raising? Well, you have a dangerous philosophy brewing in the U.S. that debt is not a problem, that the interest on the debt is not a problem because you own the printing press, that it is really not going to be an issue. More on the left do you get that argument, which is odd. Why only on one side of the political spectrum do you get the argument that debt is not really an issue, but in the middle and to the right, it's the opposite. That there is cause for concern about that. You're going to have to either cut spending or raise taxes. And there is a theoretical limit to the amount of tax you can collect as a proportion of GDP before you start getting massive capital flight. California is a good example of capital flight. New York is a good example of capital flight. Canada has become a good example of capital flight. Norway has become a good example of capital flight. If you attempt to raise taxes and raise taxes on only successful people as if somehow they're the cause of it all. And it misses the point, of continually going after successful people, because if they leave, a whole bunch of things happen at the same time. A lot of capital leaves. So you have to pay this. You got to pay the debt at some point. And this is the dangerous thinking on the right, is you don't have to pay it. you can continue to just continually roll it over and roll it over and roll it over. You never actually have to pay it off. I kind of agree with a little bit of that. You don't have to pay it to zero. You don't have to pay it to zero, but you do have to pay it to some manageable level. Otherwise, it will just continue on. Once you get past some escape number, the debt will balloon faster than you can grow GDP, especially for an advanced economy. And then we're always forgetting that, but there are recessions. What happens in recessions when the debt really takes a step up? You know, it's not some constant trajectory you're on. So at some point, you're either going to have to print money or you're going to have to allow inflation. This is the crime that happened the last couple of years, is you had inflation. You had cover. What you should have done is balance your budget while you have inflation, because real a nominal GDP is increasing. If you have inflation at 9% that you had in the first year over year, 9%, that means tax revenues are increasing 9% at the same time. Inflate the debt away. You can inflate it away, but you can't have inflation and then decide you're going to deficit spend faster than the level of inflation. You've missed the perfect opportunity to inflate the debt away. You even fucked that up, right? Somebody's going to have to deal with it at some point, but nobody thinks it's their problem. It's tomorrow's problem. So all likelihoods, Trump is going to win in November. So the tax cuts will be extended, but I don't think he's going to cut spending except on the stuff that he thinks is stupid, but he'll increase spending somewhere else. I don't think he'll cut spending. So he'll run deficits as far as the eye can see as well. It's not one side or the other on this game. It's both, which means things will only get worse. But I think he will do a lot to push interest rates down. I think if Powell doesn't lower rates, he'll replace them with somebody who will push to lower rates. So if you can get rates back to the zero line, then yeah, the debt is no big deal, right? Saw the ABR short defense video. Curious what you think are factors to look for in buying, investing in Class C multifamily property. What would be a good cap ratio when looking to buy? I'm not a direct real estate investor. There is a big difference between owning a company that manages property and then owning the property yourself, right? You need a skill set in owning the property, much like there is a difference in owning a technology company and doing the technology yourself. There's a difference. In owning the company, you want to make sure that they have the experience to manage the property. If you're doing it yourself, there's a whole bunch of things about managing a property that you need to know. As far as what I would look for in a Class C property, it's not my area of expertise. I don't do direct real estate investing. I do it indirectly. You know what to look for in a company, much like a mining company. You know what to look for in a mining company, but it's a very different thing if I tried to run a mine myself. I don't know the first thing about running a mine. That's why there's management. So I probably couldn't answer that question very well. Yeah, I probably wouldn't be very good at answering that question because, I've always just relied on good management teams to do it as opposed to me doing it, right? What school of economic thought do you think is better in giving an explanation of the current yield curve shape in this phase of economic cycle? A school of economic thought. I don't know that I would run to a school of economic thought for that one, as opposed to thinking about what theory of the yield curve, what theory of the yield curve you would use, which one would explain an inverted yield curve. And there's theory and then there's reality. An economic system is what is called a complex system. And for the most part, complex systems tend to be adaptive systems, so that they do adapt to changes in one part of the system in ways that are difficult to predict. That's what makes them complex. Complex systems and complex problems have no solution. So you can't actually solve it. A complicated problem can be solved. The economy is not complicated, it's complex, meaning if you squeeze here, something else happens somewhere else that you can't predict because of a whole bunch of non-linearities in the system. So economics is full of theories about how the system would work if it were a complicated system, but it's not. However, because complexity has no solution, we deal with complicated situations, and every theory attempts to tame that complexity a bit by simplifying it. It's a general equilibrium model or whatever the case may be. And then we determine whether or not there's anything useful in those models. You can explain an inverted yield curve with different theories, but to explain an inverted yield curve, a rapid rise in rates, and an expanding economy all at the same time is a bit of a problem. There you're going to need insight from multiple disciplines, because I don't know that Keynesian economics is going to get it done on its own. Or you could say, well, there's a breakdown in the Keynesian system because of the government spending. It would suggest that you would have the opposite of that because government deficits work against monetary policy tightening. The other argument is more financial, is saying, well, if you beat someone long enough, they will learn how to defend themselves. If you use the interest rate as a stick long enough, the market will develop tools to defend itself, that you have a system where perhaps go ahead and raise rates. It's not going to hurt me, sort of mentality. So you raise interest rates, mortgage holders say, I'm 30-year fixed. It doesn't hurt me. The bondholders that are holding the mortgage-backed security see the value go down, but if you have long-term holders say, I'm holding the maturity anyway, it doesn't hurt me. You could end up with a system where changes in interest rates almost have no effect except on the incremental credit buyer, which tends to be the lower income people. So I don't know that you can pick any one economic theory or any one school and explain it all, because they don't really take into account the complexity of the system. So at this point, it's a bit of a head scratcher as to why we're seeing what we're seeing, why we're seeing conflicting data in different places, why we're hearing different stories. You hear a lot of stories about how the consumer is tapped out, but they keep spending. The other side of it is how much of your opinion is colored by the media. That if you didn't listen to the media, would you hold the opinion you currently have about the economy? Right? So it's one of those things that if you didn't know how old you are, how old would you say you are? That you only feel a certain age because you know your age. Maybe you only feel the economy is bad because you hear on TV every night how bad the economy is, and you think, well, it's not bad for me, but okay, I get it. I guess it's bad. I don't know. The easiest way to explain the shape of the curve is that money market rates will reflect the central bank, and rates are high. The longer end of the curve reflects more of a sentiment about what we think inflation expectations are going to be, what we think GDP growth is going to be, and if we think there's any real stress on the bond market. For the U.S., the idea that there's going to be stress in that market is a difficult argument to accept. because if there's trouble there, where are you going to go? It means there's trouble everywhere. If there's trouble there, where are you going to go? So being that it is the last house on, on a street in a bad neighborhood, if you're running away, it's the last house. Where are you going to go, right? How much leeway does a company have in how they present their statements? Is it up to the auditing firm, or does the auditor just give it an okay? It depends. It depends on the and I'm not an accountant, but I do know some differences between IFRS and GAAP, being principle based, the other being rule based. Something that's principle based, you got a lot more leeway in how you can present things. So IFRS gives you more freedom to present your statements in a way that reflects the economic reality of what you're doing, as opposed to being rules based and may not quite reflect the reality of what you're doing. And then, of course, the auditor has to come in and say whether this is okay or that's okay. And we like to think about the independence of auditors. I've been audited. I've had to produce audited statements before when I was bank financed. And, they do check. They check a bunch of things. But the auditor has leeway as well. The auditor, within the policies, there's certain places you can go. So if the auditor is aware that you need to produce a certain debt equity ratio, you need to produce a certain interest coverage ratio, because when you're bank finance, you have limits on what you can do. You tell the auditor up front, look, go ahead and do whatever you have, but keep in mind that I have certain restrictions that have to be met. I need a certain debt equity ratio. I need a certain interest coverage ratio, and they will do what they can to make sure that that happens within rules. If you're way outside, there's nothing they can do, but they're not going to force you outside. If they say, well, we can do this or we can do that, they'll find a way to do something within the rules. So even though statements are audited, there is a co-play between management, the CFO, I should say, and the auditor. And in the end, management can lie, can obfuscate, can lie, can manipulate, can do a whole bunch of things that if the auditor isn't really paying attention too much, and sometimes I'll tell you straight up that you can have an audit going on where it's not the auditing firm isn't really taking it really seriously as much as it is an opportunity for significant billable hours. And if it's an opportunity for significant billable hours, what I have seen when I've gone to larger accounting firms is you get billed by the partners, but the juniors and the interns do the work. But you get billed by the partners, and you get work that you look at in the end. You say, "But I could have done this better. This is crap. This is wrong. This is wrong. This is wrong. That's wrong." I'm going through that right now with the accounting firm that I've chosen. It is just being disappointing, and I had to send an email saying, "Look, I don't know what you're doing on your side, but you're going to have to rethink this whole billable hour game you seem to be playing with me, because it's not turning me on, and this is going to come to an end soon." That's sort of life. So as far as the auditor goes, I would say there's enough leeway to, if you're close to the line, to nudge you this way and keep you within parameters, unless you're being lied to. What do you think of engineering, research, and development stocks, given that AI spending is increasing? I don't know a lot about what they do or where they play. I've never really looked at any of them, so
Since gas is scarce and we need gas to run the economy, well, gas is not scarce. Does this mean eventually this would mean the economy cannot grow at some point? Gas is not scarce. Oil is not scarce. It's not scarce. There's plenty of oil, and as we move more towards, and the world will move more towards non-carbon based fuels. It will. Solar is getting cheaper and cheaper. Solar is super cheap. It will happen. EVs are the batteries are getting better, and with more and more innovation, they will get better. There will be more charging stations. These problems will be solved, not this year, not next year, but at some point they will be solved, and at some point the value proposition of an EV will be better than the value proposition of internal combustion. At some point it will, not now, and I think not for quite some time, but at some point it will be done. That if you think, well, what about 30 years from now? Yeah, it'll be done in 30 years. Well, we got a 100-year supply of oil. If you think about all the reserves in the world right now, and I'm talking reserves, not resources, you got a 100-year supply. It's not going to take 100 years. We are not out of oil. What will happen over time is that the oil companies will consolidate. The smaller companies will fade away. There'll be a couple of, I wouldn't say a couple, but a handful of large oil companies globally that will manage the supply downwards so that they manage the price at a floor price for $70 a barrel or higher. It will be managed on the way down, because this is it. This is the last big run. You got maybe 30, 40 years. I'd probably say about 15 good years before you start to really see those drop-offs. In 30 years, I think the world is using probably 30% of the oil that it's using now. There is no shortage of oil in terms of the resource available. There will be a shortage of oil in terms of the management of supply coming onto the market. And I posted on LinkedIn, I think just last week, a report that came out from the International Energy Forum saying that unless there is increased CapEx, that by 2030 there will be more demand for oil than there is supply into 2030. So there is that issue in terms of the willingness to get it out of the ground, and the willingness to develop more fields to get it out of the ground. I think the wells that are drilled are the wells that are drilled. I would not look for any major big oil discovery in a round of new drilling at this point. I think that's well behind us. Bank of Canada cut rates. Yes, they did. News was mentioning that inflation is back to pre-COVID. How is that possible when rent is still high and growth? Wow. So there is a difference. You're confusing the price level with inflation. Inflation is the rate of increase in prices, not the price level. So prices could go, let's say something's $10. It could go to 15, 20, 25, 30, 30, 30, 30, 30, zero inflation. That does not mean that prices have gone back down. It just means zero inflation. The price level is higher, but inflation is zero. Inflation is the rate of growth of prices, not the price level. So you can say that inflation is back to pre-COVID levels. That's not saying that the price level is back to pre-COVID levels. That means the rate of growth in the price level is back to pre-COVID levels, but it's still a rate of growth, right? It's just, instead of growing like this, it's now growing like this. It's the big growth rate is done now. The growth is going to be hopefully 2% going forward, but it's always been somewhere between 1% and 3%. So it's not the price level that inflation is measuring. It's the rate of growth in the price level. It's pretty clear you've never worked a day in your life.
You would be wrong. You would be wrong. When I was in high school, I worked as a painter, and I worked in for a company that had a whole bunch of apartments, and I would turn over apartments. So I would go in, I'd clean the carpets, I'd paint and do the windows, and then in the winter you're outside chopping the ice. And in Timmins, it's a lot of ice. Worked construction for a summer, all the way through university. I worked a summer on a farm. That was hard work. It was digging, using a tractor with a chain and digging vines out of the ground. That was brutally hard work. To say I've never worked a day in my life, you'd be wrong. And when we say work, I mean, what do you mean? Like hard physical work or brain work? I've worked probably longer hours than most people do over the last 5, 6, 7 years. When you're building a business, you're 12, 13, 14, 15 hours a day, 7 days a week. So I don't know where you get the statement, it is clear you've never worked a day in your life. It is clear that you're a pretty bad judge of character and a pretty bad judge of what you see. You're making assumptions based on the limitations of the life that you can see right in front of you. I don't know if that's such a good idea. Brave of you shorting MicroStrategy when the fan base investors are deluded. Well, yeah, so I did short it, and it's super bloody expensive to short. Each contract, $295,000 to short each contract. So, you short 5, you're 1.5 million. But, it's elevated because of the volatility in this thing. And you have volatility because it's got such a small float. 17 million shares is a rather small float. There's 24 million shares, but 8,000 in treasury. So outstanding is only 17, and we don't know. I think Vanguard is the largest holder of shares of MicroStrategy. So the float may be really small. That's why you get these outsized moves. So your broker is going to demand more margin whenever you have something like that, even on selling calls. So I think it's hard to short that company. It's expensive to short that company, and that's probably why it has the value or the price it has, because the short side cannot express its opinion. So it becomes an inefficient price because not all the information in the market is priced in when it costs you a hell of a lot to price in your information. Yeah, it's a tough one, but I did it. Without a long position on Bitcoin, I did it. Friday, you had a nice drop at the end of the day, and I thought, let's just take it. We'll take it. It was a nice 24-hour return. And yeah, it probably was a stupid short to put on anyways, not because the fundamentals suggest that it was stupid, but because of the fan base, because of I don't know what you have to believe to think that. I mean, you could just buy the Bitcoin ETF. I'm not getting the whole it's on a balance sheet, it's worth more business. EI employment level from household survey, NPE non-farm payroll. Okay. So monthly difference in last reached 200K before COVID. The monthly difference between the two. So the establishment survey is the one that's watched more. It covers about a third of the population in terms of jobs. And every job is counted. Every job is counted. Even if one person holds 3 jobs, that's counted as 3 jobs. But in the household survey, it's only counted as 1. The household survey has a larger definition of who has a job, a larger definition. So let's say that you work in your family business for at least 15 hours, but you don't get paid, you work for free. The household survey calls that a job. You're employed. It calls that a job. If you are self-employed in a non-incorporated business, you have a job. If you're a nanny, you have a job. But the establishment survey would not catch that because you're not working in any establishment, you're working in a household. So because the household survey has a much broader definition, but a much smaller sample, the standard error is much larger. So it's plus or minus 600,000 on either side. So a loss of 400,000, but insignificant. Now I can see some people are saying that over the last 2 years, the spread between the two is 5 million. You're committing a statistical error by adding those, because when something is not significantly different from zero, you must use zero. You can't say, oh, it's plus 350 or minus 500. You must use zero if you're going to add these samples. If you believe that each sample is independent, in other words, that the answer I get in this sample is not going to be dependent upon the answers I got in the last sample, but are going to reflect whatever the situation is in this sample, you cannot chain them together and add them. You must add zeros. Whenever it is within the confidence interval, you must add zeros if zero is in that interval. So it's statistically bad math to say that there's a gap of 5 million between the two. Statistically, it's bad math because you're adding insignificant numbers and calling the end result significant. You can't do that. So you have different definitions of what a job is in the two samples. That's why the establishment survey is seen as the measure to use, because it does count jobs, and it's a big sample. It's a really big sample. It has a tighter confidence interval because of that. As far as I know, MicroStrategy should be reporting as AP. I'm not sure what AP is. Regarding your company analysis videos in the applied series, any possibility you can follow up videos? So for example, doing the 10K followed by the 10Q so that you could share your thoughts on changes. The idea behind the video for, like, let's say understanding automotive OEMs is that you can understand the industry that they operate in. It is not meant to be an analysis of the companies and a recommendation for buy, hold, or sell. I use the company's 10Ks to show you as we read through where we're seeing what we just talked about. So we talked about leasing and the importance of leasing, because leasing leads to higher customer loyalty. So the more an automotive company can lease, the more it can capture that leasing, the higher the loyalty is. Not only that, you have a built-in predictability of when that customer is coming back to market. And it's, again, higher loyalty because of that. So suddenly the leasing section, when we get to, has a little bit more meaning, because we're saying, okay, well, what's the capture rate on the leases? Because we know that the higher the capture rate, the harder it is to steal that market share away from that company. That's what the understanding videos are meant to do, is to give you an understanding of the industry that you're in, so that you can take any company's, any OEM's 10K, and as you read it, go, okay, I understand what's going on. It is not meant to be an evaluation of whether or not you would buy this company or sell this company. I do a little bit of that, but it is in no way a deep analysis of the valuation of a company. It is a deep understanding of the industry in which the company operates in, so that you can understand the 10K. To follow up with the 10Qs is something altogether different. Now I'm not really helping you understand the industry it operates in.
Now I'm being a stock analyst, a company analyst at that point by going through the 10K. Not saying that I wouldn't do that, but that's a lot of work. To construct a peer group, let's say in autos, you would have Ford, GM, Tesla, maybe BYD, Toyota, and BMW. You'd have like 5 or 6, maybe Volkswagen and Stellantis in there. You have 5, 6, 7 companies where you would have a small video on what each company is doing and the business model structure of each company, what its market share is, what markets that it's in. And then you would every quarter review the 10 Qs and determine whether this was good, neutral, or bad for the company, whether you would move from a neutral on this to now a buy, whether you had a buy, whether you go to a neutral. That's a lot of work. That's a lot of work to do, and that's one person's job. I can't do that for 50 industries. There's no humanly way possible to get that done. A couple of weeks ago, I laid out a roadmap of what's going to happen to the applied level. That is a midterm strategy. By midterm, I mean somewhere in the next 2-3 years, I will be assembling good analysts in particular industries and saying, listen, why don't you do this, work on this industry, and there'll be a recurring revenue stream on that. So those are add-ons that would have to be paid for, unless you are a applied level subscriber by July 31st. Anyone in by July 31st is grandfathered in forever. You never have to pay. But to get these analysts to do this, there has to be some revenue model. You're not going to get that. You're not going to get it done for free, number one. You're going to have to pay to get it done. If you're going to have to pay, it's incremental cost that has to be paid for somehow. That is the hope of what I want to do, is to find good analysts with 2, 3, 4, 5 years experience in a particular industry that can bring that kind of repetition so that every quarter, the goal hopefully is that every week there'd be a small 15, 20-minute video on any news in that industry, in that sector that affects the companies, any investor presentations, any company releases, any regulatory changes, things like that, and then the quarterly updates for that. That's a full-time job. If you're following 5 to 10 companies, that's a full-time job right there. That's nothing that I can do on my own. That is a full-time job, but I will be looking for those people. What I'd like to be is the applied level to be is sort of like a deep research company for the retail investor, not the institutional. In other words, none of this 30-page analyst report with 10 years of cash flow forecasting. And the retail, that's way too much for the retail investor. That's overkill. You don't need that much, but you do need something. So that is the ultimate goal. But the sector studies are not meant to be a deep valuation of a company. They're meant to help you understand the industry so that you can now go out and read. Now that we've done automotive OEMs, you can go out and you can pick up BYD's or Toyota's 10K and you can read and go, I understand exactly what's going on. What are your thoughts on CFDs? Contracts for differences? I don't know why that would be any different than a futures contract that you close out before delivery. I mean, that in the end is a contract for differences, right? So if I'm long CAD futures at 72 cents and it goes to 76 cents and I close it out, have I not just created a contract for differences? I mean, I'm not actually taking delivery of the currency. I could, but I'm not. So is that not a contract for differences at that point? So I think a contract for differences is really nothing more than an undeliverable futures contract. You can't have delivery. But depending on your broker doesn't allow delivery anyways. So you would be closing it out anyway. So as far as Interactive Brokers is concerned, almost every futures contract I enter is, in essence, a contract for differences because I can't take delivery under the contract. Oxy's implied volatility is too low. Is the premium collect worth the downside risk? It is a light premium. I will say that. It is light. I'm looking at July's. I've got 60s at a blended premium of $1.46. So they're underwater now because I think the premium's sitting at 180. I got some at 133, a big chunk at 133, and I added an incremental amount on. I think I got 210 or 220. I think it was 210 when it dropped to low 59s quite a bit ago, like a week or week and a half ago. Since then, it's been holding on to 59.50 quite religiously. It's not giving me, I'm looking for the 57.50s for about $1.10, $1.20, and it's not giving it to me. If it breaks 59.50 and it runs to 59, my hope is that it can run to 58.50 before I sell them. But it's holding 59.50 quite well. That if by Wednesday, well, I wouldn't say Wednesday, Thursday, maybe Friday of this week, if it's still holding the 59.50s, I'll just go ahead and sell more 60s at I don't know, maybe $1.60. If it still isn't around the 59.50s, it would be a week less on the time. So somewhere around there. What is the minimum size position for an equity swap? Well, that's OTC, so I don't know. That would depend on the counterparty. Is it reasonable for a retail investor with a position of 2-3 million in a single stock to consider an equity swap for risk management? Well, it would be questionable as a retail investor whether or not you would be a suitable counterparty for a dealer, because an equity swap is OTC, right? So that would be questionable whether or not you would be suitable. You're not going to get that done over an exchange. Do you think there's more opportunities in smaller cap companies? Not yet. Not until rates start coming down. I wouldn't touch small cap yet, not until rates start coming down. Where would start if you were investing with smaller capital base? You don't have to run to small caps just because you have a small capital base. Right now, I think larger firms are sort of the winners here because they can survive these higher rates and they're growing their market shares at the expense of smaller firms. Yeah, I don't know that you need to run to smaller firms just because you have a smaller capital base. There's lots of look, 10% is 10%. What does it matter if it was a small cap stock that you invested 10,000 in, or a large cap stock that you invested 10,000 in? 10% gain is 10% gain. You don't have to buy 1,000 shares of something to spend 10 grand. I mean, you could buy 50 shares of something, spend 10 grand. 10% return is still 10% return. Who cares where you get it? So I don't know that that small accounts mean small cap stocks. I wouldn't make that conclusion. Biggest correction will be in small cap stocks. If there is one, yeah, small cap would suffer a bit more. Just want to understand, do you also think the ECB cuts are a little controversial? Seems like hawkish cuts leave the path ahead uncertain. No, I think she was quite clear. Even though she raised or they raised their inflation forecast ever so slightly, but they still raised it. They cut because they thought, well, we're not just restrictive, we're really restrictive. So let's cut to get down to restrictive. Even though inflation is coming up, we're still too high. We can still drop rates and still be okay. It would still be restrictive. if there is something more going on, because you do have central banks that are cutting, if there's something more going on, a recognition that there's stresses building up in the system, that we better start cutting rates now, but the last thing you want to do is tell everyone why we're cutting rates. It could be that, because they all talk to each other, so it could be that they're all on the same page about something, and cutting rates under cover of the economy. As far as I know, both the Bank of Canada and the ECB are single mandate central banks, meaning price stability. So the ECB's single mandate is price stability. They're forecasting higher, and they cut rates, which means there's something else. There's something else that's concerning them, potentially. And I think that same thing is probably going to be concerning the Fed. This year's Jackson Hole is going to be super, super interesting, because the topic, and I'm just paraphrasing here, the topic this year is, does this shit even work anymore? How effective is this monetary policy stuff anymore? That's the big topic this year, is on the effectiveness of monetary policy. Because I think quite a few central banks have said, this is not really working out the way that theory says it's going to work out, what's going on, especially the US, right? So this year's Jackson Hole in August is going to be super interesting on that one. Didn't bother with Roaring Kitty stream because it's not my thing. LinkedIn post gave me a chuckle. Well, I watched it only because it's to me, it seemed like he was playing a very good chess game up to that point. Like, everything seemed to have been well thought out. Everything seemed to have been done just at the right time. He's very cautious on not saying anything. He scheduled his live stream on a Thursday for a Friday. Everything just seemed so well thought out that I wanted to hear what he had to say. And I've never seen a live stream with 650,000 people on it. It was incredible. It was like being at Woodstock at that moment, that cultural moment where I thought, if this comes off big, I was here, I saw the thing. And then it started with him bandaged up and laying there, and then he started doing this, and then he just seemed to have no words, just no plan, no script, nothing thought out, no words, nothing. Now, he was late. So my thinking was, his lawyers are probably doing the best they can to tell him to just please don't say a single word. Don't say anything. Don't say anything. And I think maybe he might have had a script and he had to abandon it, because how could you play the game so well to that point and then let it go? And you saw the stock just dropping. You saw the conversation just turning against him. This guy's got nothing. So, so you got nothing to say, nothing here. What a waste. And it was just the crowd turned against him. But 650,000 people for a live feed is cult status. I don't even think Donald Trump could get 650,000 people on for a live feed. That's cult status beyond anything I've seen. And to let it all go, to just let it all go. If it were me up to that point, and my lawyers had convinced me that saying anything was going to be nothing but trouble, I would not have gone on the live stream. Or I would have gone on and I would have said, I think you know what I'm going to say. I, at this point, under advice of counsel, cannot say anything. And I would have ended it right there. That in itself would have been enough to keep it going. But it was, 10 minutes in, I was like, oh my God, like I was starting to get secondhand embarrassment over it, watching this thing, saying, what are you doing, man? Like, what are you doing? Like, it was pretty bad. I think he
whatever social capital he had, I think he spent a lot of it right then and there. I mean, he could have gone on to something even greater from this. It could have gone on to something bigger. These are the moments that make you, these are the moments that make, like, a Michael Burry or something like that. He could have stepped into that light and been something more, and you see the whole thing just fall apart and disappear in that whole thing. And it's like, maybe he had some lawyers, but he didn't have good strategists. He should have had a strategist in the room or something, for God's sake. But hey, maybe that's who he is. I don't know. Bright Cove using the movie theater popcorn pricing strategy. Yeah, I cannot recommend that company. I cannot recommend it. In fact, I would recommend going to Amazon and just looking into using Real Players subscription and just bypass these guys altogether. Can I ask an honest question? I'm having trouble computing how Roaring Kitty went from 40 mil to 210 in 3 years. That's a tough one. And you can't just say he went from 40 to 210. To end up with 210, you had to make a lot more because you got to pay taxes. So it's not going from 40 to 210. I think it was 180. The thing was, he made 50 back then. He suddenly had 180 in a period of 3 years. With silence online, absolute silence online. You telling me that he wasn't rolling in into other things and talking about it? So that is a question, is to get 180, being a global expert here on paying taxes, you got to make a shitload more than 180 to end up with 180, because the government wants its pound of flesh out of that. These days, it's 2.5 pounds of flesh with inflation and everything, but you get what I'm saying. That is a big question, is where'd you get the money? Where'd you get the money, dude? What are your thoughts on home health aid industry in the U.S.? Don't know enough about it. I can see the story for it. But just because there's a story doesn't mean anybody can make money at it if everybody's trying to do it. So you could say this is going to be a big thing, and it could be a big thing, but there's so many people doing it, nobody's making any money. The question is, whenever you have these big markets, and there's big markets everywhere, it's who can make money in those big markets. Thoughts on calls on triple levered TL? No. Stay away from triple levered. I get what you're trying to do. Is the drug in the market is not enough, so you want to find a fentanyl laced opiate to take, and so you're running to the triple levered, and then that's still not enough juice for you. You wanna lever that and use the calls. No, I would not advise any of that. That's not smart investing. Your goal in this game, if you're going to be a serious player and you're going to be a long-term player, your goal is to get on first base. That's it. Your goal every time you get up to bat is to hit a single. Now, maybe you'll hit a double. Maybe you'll hit a triple. Maybe you'll hit a home run, but do not swing for the fences on every pitch. Because if you look at statistics, baseball statistics, all of your home run leaders are your strikeout leaders as well. It doesn't matter in baseball if you strike out, but in the finance world, you strike out, you lose money, which means, you strike out, you need a couple of home run hits just to get back to even again. It's odds you can't win. Get on base. Get on base. Get on base. Get on base. The runs will come in. The runs will come in on their own. That is how you earn an income. You earn a paycheck, and you grow your assets under management over time. Is get on first base, and once you swing at a pitch to get on first base, let it go to the next one. Too many people just watch the positions they have waiting for him to come home, waiting to harvest them. Don't spend your money waiting for the harvest to come in. Don't spend your time waiting for the harvest to come in. Spend your time planting new seeds. Go on to the next idea. Spend your time researching the next idea. The market will if you're good, the market will take care of it. It'll come in on its own. Just let it do its thing and go on to the next thing. When you start looking for more and more juice all the time, it means you've run out of opportunities, you run out of ideas, and you're looking for the big payoff. Big payoffs are rare. Not that they don't happen, they do happen, but they're rare. What you don't see are the millions and millions of accounts that are broke trying to hit that home run. People win the lottery every week, and you see the picture of them every week. So you can look at the website, you can say 52 people, like every week there's somebody winning $50 million on this lottery every single week. But they don't show you the picture of the tens of millions of people that lost, that didn't win a single penny. You don't see the picture of the tens of millions. You only see the picture of the one. So it leads you down this path thinking so many people are doing this. It's not true. It's not true. Get on base. Get on base. That's it. As you went through PhD in finance, did you advise to get PhD or CFA is good enough? PhD is not a practical degree. It's an academic degree. It's a research degree. It is not training you to be a practitioner in the least. It's training you to be a researcher. So you spend a lot of time with the philosophy of knowledge of what is ontologically, what does ontologically exist? What is the truth? How do we get to know that truth? What are the epistemological methods by which we get to know that? That's where you spend a lot of your time. You spend a lot of time in the literature, in the theory, in the research methodology, in that sort of thing. It's not designed to make you a practitioner at all. So most PhDs in business schools would not perform well in the real world because they're purely academic, especially if they had no tour of the real world. They're purely academic. And the more they get involved in their research and their publications and their writing, the less and less likely it is that they will actually engage with the real world, because it's not required, right? So no PhD advisor is going to advise you to do a practical designation when your future lies in research. Do you consider insider activity when making an investment decision? Yeah, I think they're important. Look at some hot IPOs. I often wonder if management issued shares so they could get liquidity. That is common. UPS did that. UPS, when it was private, was giving bonuses to management in terms of ownership. But you have to monetize that at some point. You have to give them the opportunity to monetize it. You can't just have internal monetization events where you say, okay, well, here's our valuation. Management will buy back the options from whomever. You got to give it to the market. So there are companies that go public because they need to give the employees who have a whole bunch of options a liquidity event. Because if you don't, it's going to be hard to keep the talent because they'll just go somewhere else where they have liquid options. So yeah, there is some motivation in going public, specifically to give option holders liquidity. And after they go public, I think there's a lockup period where you cannot trade. I was part of an IPO as an insider. 3 years. 3 years you're locked. Well, I was locked up for 3 years. You can't sell for 3 years. It forces you to have to perform to protect the value of the company. I think it's 6 months, in some cases, up to 6 months that the insiders can't sell. But there will always be a group of employees that, after the lockup period is over, they're sitting on millions of dollars of options. They're suddenly millionaires. They might not stick around. That is the risk. Person in the mid-30s, what percentage of 401k should be invested in bonds versus equities? Recently shifted my account to include more bonds. Well, in your mid-30s, you would only use the 401k to the extent that you're in the highest, your income hits the highest tax bracket. You want to bring that down as much as you can. You're in your mid-30s. I don't know that you really should have a very large allocation to bonds to begin with. I guess it would depend on what you do for a living, number one. But I don't know, somebody in their mid-30s should have more than 20%, 30% in bonds. Although now, at this point in time, given the inversion of the yield curve, given you got 10-year rates at 4.5%, duration is a real thing. You're not just holding bonds now for the yield. That you could look at duration and say it's just as good as any equity, because if we do get a rate cutting cycle, the bonds can perform quite well because just on the duration component. So you could think about bonds as, I'm buying 10-year bonds that I plan to sell in 3 years, as opposed to saying I'm buying 10-year bonds because I like the 10-year yield. In which case, I would say you're treating your bond allocation like an equity allocation. So sure. Any advice for young Canadians looking to become independent with high rental and home prices and high cost of living in general? Most younger people I speak to seem very demotivated. Yeah, it's a problem. I will say that is a problem. And it's a problem that is the result of a massive underdevelopment in properties. A lot of times because of regulation of where you can build, how long it takes to bring a property from an undeveloped to a developed state. Combine that with immigration levels that far exceed the ability of the country to absorb in any meaningful way that is beneficial for especially the ones coming in. And you get a situation like this where, again, because the economy is a complex system, you get these unintended outcomes where now a whole generation is going to find it difficult to experience what I experienced as I grew older, the joy of buying your first house, in your late 20s, early 30s, with less than where your combined mortgage payments and property tax payments are somewhere around 35 to 40% of your income. You're going to be 80 to 90% unless you split it with a bunch of people. So, yeah, you got screwed. What can we say? In every decision that's made somewhere in the economy, you think about the greatest good for the greatest number. I don't know that we've had, that Canada's had a government that really cared about the greatest good for the greatest number as much as they cared about the greatest good for the most marginalized, without thinking about what the unintended consequences would be. So you're an unintended consequence. There, in every decision, again, there will always be unacceptable outcomes for certain people. And you hope to keep those small, but every decision, somebody somewhere is going to pay a price that is too high for the decision, but you hope that 10 people benefit while one person may really suffer badly because of it. Life-changing, in fact. There's too much of that that's been going on in Canada, that you do have a whole generation that, as far as housing is concerned, kind of got screwed over on that one, right? Yeah. No other way to say it. On the other side, the wealth transfer from the generation that will be exiting this world, the wealth transfer is the largest in history. So you at least have that to look forward to. And if you have no inheritance, big inheritance in your future, then you are one of those that we would say has suffered unacceptable outcomes. But you can take solace in knowing that your unacceptable outcome helped other people, helped somebody else somewhere. And that's a burden that you carry. Rather than higher taxes, you have to change your lifestyle. The idea of buying your house yourself probably is not something, unless you have parents that are going to help you, probably not something you're going to get done in any significant city. I don't know that that's a good answer, but it's a factual, I wouldn't say factual, it's as true an answer as I can give. I'm not going to say everything's going to be okay, and my God, you just got to dig in and work a little bit harder. Some things can't be overcome. I don't know how, in looking at the pricing of housing in Toronto, that if I were just graduating university, I'd be looking at that going, how the hell am I ever going to buy a house? I'll be renting the rest of my life, and I'll be paying 60% of my income in rent. How the hell does this work? I'll never be independent. I'll have to have roommates for how many years? I mean, it would be a different world that I would graduate into versus the one that I had. So what can be expected of dealer positioning from shorter term to longer term government bonds? What can be expected of dealer positioning? I don't know how to answer that question without some previous setup to it. What can be expected of dealer positioning from shorter? Well, you tell me what you think, and then I can comment on that, but I'm drawing a blank on this one as to, I don't know, beats me. Why do you think anything different is going to happen? Yeah, you tell me what you think, and we can go from there. How should we interpret the OAS figures we look at in the market outlook? OAS is the credit spread that is being paid for different credit qualities of bonds. That is the spread over whatever if we think about the spot rates that price out a bond, it would be the spread. Well, if it were a bond with no embedded options, it's a spread over each spot rate pricing out the bond. If we are dealing with bonds with embedded options, which is more likely in the high yield space, if you're going to find convertible bonds or bonds with calls and puts, it's more in the high yield space. The OAS is the credit spread over all the forward rates in the pricing tree. It's just a way to measure how many basis points you're getting paid for the credit risk that you're taking on. It's probably the best way to think about that. You have discussed the depth and duration of yield curve inversions. Where are we on time? We're okay. And how the level of sophistication of financial markets today may be mitigating the effects of the inversions. Could there be trouble brewing for those on the side of these interest rate hedges? Not really. Not really. there is always a reason to be on the other side, right? Somebody's deposit is another person's loan, if you think about it that way. Somebody's gold production is another person's gold consumption. So there's motivation on both sides to hedge a price, and both sides benefit by locking in a price. The producer locks in a price because they don't want the price to go down. The consumer locks in the price because they don't want the price to go up. So they lock in the price, and it will change. Somebody will have to give money to the other side, but both sides are in essence locking in a price. If the price of gold goes down, the producer gets money from the other side, thereby say getting the original price. The consumer could have paid a lower price, but they agreed to lock in the price they had. They pay the payment to the other side. They're just paying the price they agreed to pay. So no, I don't know that unless you have wild speculation on the other side, like you had in 2008, with AIG acting as an insurance agent, selling CDSs all over the place, purely for speculation purposes. Unless you have that and very concentrated, no, I don't think so. Because again, my deposit is your loan, perhaps. So we're both motivated to hedge if we're in that market. Do you see continued run up in SPY with NVIDIA split? I'd like to think the market has become more efficient than that any run up because of a split would already have run up before the split. That's sort of the way I would see it. If there is run up in SPY, I would tend to say it would be less about split and more about the new entrants. Was it KKR is in? Who else is in? KKR is in. 3 are in, and then 3 are out. So maybe the ones that are coming in have more upside to them, or higher valuations are possible for them. I don't know. Have you changed your thesis timeline for US going to have to cut rates due to the increasing debt increase? No, I still think July is live. Do you think there's an AI bubble? Yeah, I do. Thoughts on NVIDIA? I've given my thoughts on NVIDIA before, and it comes down to one of two things. You either believe that this is a long-term build-out of AI infrastructure, and this is a 6, 7, 8-year story, or it's a 2 or 3 more quarter story, because after everybody has what they need, you'll have the capacity in place anyways. What do you believe? I personally don't know what to believe, but unless you start getting some real traction on these AI models, I think there's going to be less and less excitement around spending all this money to train a model. If you're saying, look, lots of companies are trying, lots of businesses are trying, and maybe this is as good as we have for the next 5 or 10 years until we get the next leap of breakthrough. And maybe the next breakthrough is not computing power. Maybe the next breakthrough is a breakthrough in algorithms or a breakthrough in code. I don't know. I don't know enough about the technology to really make an opinion on that. But yeah, I think there's a bubble. I mean, everyone is using the word AI, even if you're just running regression and using predictive analytics, which have been around for 30 years. Suddenly now it's AI, right? What do you think of ABR price movement last week? It ran up to 14 again on this idea of there's going to be short squeezes everywhere. And it came back down. It is not a company that you can make up a story on. It is a company with financial assets. They will be priced as financial assets, which means the company, if you believe the company's reporting, should trade in and around its net asset value per share. And if you think rates are coming down, maybe it will start to trade at a premium to its net asset value per share, which is 1306. So I seem to think 13 to 1350 is probably
is probably the right range for it right now. Can Hank, heterogeneous agent, new Keynesian, Hank models. Coherently explain rising rates. Oh, I'm not familiar with Hank models. Just trying to tear it apart. I know what new Keynesian is. Heterogeneous agent, as opposed to everybody, as opposed to the rational agent. I don't know. Exciting and perhaps volatile week ahead. Apple event, yeah. Fed policy decisions, CPI inflation. Apple is that's an Apple thing. I don't know that would affect the market too much. I think there you're expecting a new phone or some kind of AI embedded in the phone. I am ordering a Studio Pro when I get back to Canada on the 19th. The one I lined up a couple of weeks ago had the M2, and I'm told that the M3, I should wait for the M3, which was like June 7th or June 8th it was being released. So when I get back to Canada, it's a Studio Pro M3, 4 GB drive, I think 64 or 128 gig RAM. It was ridiculous price, freaking ridiculous price, I'll tell you that. But with the size of video now, especially the ability for 4K, the video files are so large that the rendering with ScreenFlow and with Final Cut Pro, rendering takes so long now that I have no choice but to get. And I think the M3 has, I don't know how many GPU cores and CPU cores it has, but it has a lot. So I'm hoping it'll lower the amount of rendering time. Schedule anywhere on your website of all your events. I only have one event, which is Sunday night at 7:15. Live event Sunday night. Are you still going to do the Q&A for the applied series? Q&A is being canceled. I answer questions under the videos. If you leave a question under the video, I've been answering all those. I never used to. I'm answering all those, and I do this. So if you have questions from the applied level, I can answer them. I can answer them here. But to do the Q&As, the turnout wasn't as great as I thought it would be, and it never really got the traction I wanted it to. Do you sell puts on any of the pharma manufacturers that you covered in sector studies? No, I don't. I didn't really get much excitement for myself out of that. I'd need to do a deeper dive. The pharmaceutical video I did was understanding the whole ecosystem. What role do the manufacturers play, the distributors, the pharmacies, the PBMs, the insurers? Nothing I really cared about in there. When it comes to the manufacturers, I don't have a biology background, so other than taking the company's word for it that this drug has this market and it does this, I don't know enough about it. I'm not comfortable enough there. Unless I took a company and lived with it for a while, I'm just not that comfortable. Add an economic calendar for your applied series subscribers. Lots of work to get that done. So no, I would say there's lots of good calendars out there. Trading Economics has a good calendar. Daily FX has a good calendar. Interactive Brokers has a good calendar. It's already been done well, so I don't think that I would add one. Also, what are your thoughts on Teva's performance over the past year? From what I can recall, they are challenged. I don't know that I would have been interested in Teva. How do you think they turned it around? I haven't followed it.
It's really not my thing.
What is disposable personal income in chain dollars? Is this just real disposable personal income? In chain dollars, yeah. Yeah. It's just the growth in disposable personal income from some base year, the real growth, yeah. Do you have views on this recent drop in American Airlines? I don't know about the recent drop in American Airlines. This may sound really, really controversial. But what do you think about central banks targeting deflation instead of inflation? Would it lead to a better quality of life for society? No, it would not. It would be a significant problem for a lot of people. With deflation, you're not going to get wage increases. And if deflation hung around long enough, you'd actually get wage decreases that new hires would be hired at a lower wage. Your incomes would be flat, but your debt would stay the same. Your debt would not deflate. With inflation, your wages go up with inflation and your debt stays the same. So your debt becomes more and more manageable and easier to handle year after year. With deflation, you're paying back your debt with more and more real dollars. Being that so many people are debt holders, that would be a big problem. Being that the government is a significant debt holder, that would be a huge problem. That would be a big problem. So targeting deflation, I don't think would be a good thing. What targets deflation is technology. Innovation is always deflationary, always. You can be deflationary. You just have to choose the things you pay for. You can be you can live a deflationary life. It's really not a difficult thing to do. You just have to determine what you're going to spend money on and when you're going to spend it. But you can do it. Why the sell-off on cap rate on Friday? Because there's less thinking that interest rates are going to go down as aggressively as we think the central bank or that we thought they would drop on Thursday. But I think it's an event that allows me to buy more if it continues to go down. How did the U.S. central bank arrive to 2% inflation target? Why not 1 or 3? There is a belief that inflation, the way it's measured, tends to overstate the real rate of inflation. So that if we say 2% and it overstates, maybe it's really 1%. So if you target 1%, you're flirting with the zero line. You need some inflation because that is how you continually raise tax revenues without raising tax rates. And for countries that have grown with debt and households that enjoy a lifestyle with a certain amount of debt, inflation is almost necessary. But you don't want too much inflation, but you don't want prices to be flat, and you don't want deflation. So 2% seems like a good number, right? Have you started to research any new themes over the past month, or has anything caught your eye? I know you've dipped your toe into Goodyear tire recently. Yeah, Goodyear. Where are my notes here? See, I do. I don't know if you can see them. I do big sheets of notes. I've been looking at. You're not gonna believe me when I say this. I've been looking at blockchain and looking at the blockchain space to understand it a little bit better. And I do have an understanding of the blockchain, the idea of the permissionless, proof of work, proof of concept, all of that stuff. I'm looking for a reason why a particular blockchain would interest me. And if it does, then maybe there's something on the crypto there that I could say, okay, well, this is going to be a thing. And almost every use case, and they are just use cases at this point, well, it can do this. I find a fatal flaw. Collateral, for example, is I lend you money and you put up collateral. So you can have a smart contract such that if you default, the collateral transfers to me. Can't have that. You can't have collateral change ownership because certain types of collateral come with transfer taxes. Well, I don't want the transfer taxes. Can't have that. Fatal flaw. The big one that was put down there was houses and mortgages will all be on the blockchain so that if you default on your mortgage, the ownership would automatically transfer to the bank. Can't have that because the bank's not going to pay the land transfer tax. The bank just wants to take possession and sell it, having taken possession but not ownership, right? Because the bank doesn't want to pay the land transfer tax and then sell it after that. So fatal flaw. Everything I find, I think, okay, well, that's interesting. Fatal flaw, fatal flaw, fatal flaw. I'm really trying to find a reason for a particular blockchain where I can then say, okay, we've got something here, but I don't think there's anything there. I'm having a hard time with it. The payment system. Okay, I can pay you immediately right now. I can already do that through the bank with no fees. I can already do that. I can pay you through my bank. You don't lose anything. I don't lose anything, and it's free. I can already do that now. What do I need a blockchain for? Well, it can't be changed. The records can't be changed. They're immutable. It's difficult for any bad actor to take it over. It's really secure. So, okay. So if something does happen, I call a 1-800 number and the transaction is reversed. Oh, no, there's no 1-800 number. You're on your own. Something happens to my bank, it gets hacked and money disappears. I call a 1-800 number. I say, hey, it's not me. I get my money back. Transaction happens in my account I don't like. I get my money back. I got customer service to call. Almost any use case I've come across now, depending on what blockchain it is, and some blockchains are designed for certain things, and then there's some blockchains that are more open where you can write software to lay on that blockchain to do something. Almost everything I find has a fatal flaw, where either it's a market that's way too small, or we're years away from moving anything to that, and there's a whole bunch of problems that have to be solved to begin with. The probably the more damaging part of it is the cost. Is once you distribute the ledger, the cost of maintaining the ledger is far greater than if you had a centralized location. The cost is far, far greater. So you are actually moving to a less inefficient system. I can find no killer app. I can find nothing so far that I can look at and say, there it is right there. Finally, we've got something. This technology has been around for 15 years. And what? Where is it? What? I mean, technology doesn't just hang around like that. If there was something, it would have been done. If it was compelling, would be there. But we're not. So I don't know. Maybe I just haven't come across the right company yet or come across the right application. But everything I've come across falls apart under the slightest bit of scrutiny, falls apart. There's always a fatal flaw. So that's what I was working on. XLU has run a lot year to date. Do you still see upside? I think I would. I've been looking at XLU. I've been looking at the puts on XLU in the mid 60s, 68, 67. I think I'll wait till Wednesday. If Powell is really hawkish, XLU will probably have a pullback, and it'll be a nice opportunity to sell at the money puts on If I can see XLU get to 69, 68, 67, I'd rather sell puts there. But yeah, I do see upside. If you believe in an autonomous future, that's going to require a lot more networking, a lot more connected devices, and connectivity. Anytime you're sending information anywhere requires electrons, requires electricity. Charging, you're moving, the energy to move a vehicle from the gas pump to the home utility. It's going to require more. If you have AI and more AI powered devices, that's going to take more battery power. You need more charging. You need more energy. And if you continue the green transition, you need more assets being built, which means the rate base increases, which means more revenue for the utilities. What's not to like? So yeah, I think I like the utilities going forward. Level 2 material is not at level 2. No, because CFAI has not opened level 2 registration yet. Look for that, I believe, last week of July, first week of August. I heard the market thinks utility companies will need significant investment to fund AI-powered needs. And yeah, well, any investment is, utilities have a regulated return, which means whatever their rate base is, whatever the value of their assets are, if their assets have to grow, their revenues will grow, period. And they have to. That's how it works. Let's talk about semiconductors. How about superconductors? Do you see copper as a medium for electrons being replaced by superconductor? Do you see copper as a medium for electrons? Oh, I see. Well, that's the beautiful thing about science and technology. It keeps moving forward. I don't know enough about the science and the technology to be able to make a statement about that. Do you see a bachelor in business administration with focus on finance and banking, and then a master's in finance and economy is a good option when my goal is to get CFA after 5 years? That's a hard question to answer. I see education as a viable pathway that opens doors that otherwise wouldn't be open to you. But there is a difference in where you get that education. That's just the world we live in. That there are some schools that probably is more of a waste of your time. Tier 3 schools, if you're looking at that, is, get your undergrad, but, really knock your undergrad out of the park so you can get your master's at a school that matters. It does matter where you go to school. It matters for the people who hire you. It matters for the people you meet and while you're at that school. So it's a simple question to answer. Would you rather know the graduating MBA class of Harvard or the graduating MBA class of Tri-County Community College? Right? And who would you rather know you? Where's your better social network going to be? Pedigree matters, especially in the US. Pedigree still matters. So, saying I'm going to get this degree, what brand is it? Is it a Stanford brand? Is it a Wharton brand? Is it a Harvard brand, a New York University brand, or is it a Tri-County Community College brand? If it is a Tri-County Community College brand, maybe rethink it. So it's hard to answer that question without knowing the brand that you're getting. How's Costa Rica treating you? Jesus. I got things to say, but I have to be careful because I'm still in Costa Rica. But when I get back to Canada, man, am I letting loose. I got things to say. I got shit to say. There's a lot wrong with this country, and there's some good things. But there's a lot wrong. And I have learned slowly over time to not believe a single word a person tells me. I don't believe a single word anybody tells me anymore. Not a single word. I can explain that later. Have you made any local friends? Yeah, a few. Any regrets? I think the only regret I have is that it took me this long to figure out the system here, but I figured it out. I know how this system works now. And in the last couple of weeks, I have changed a few things. And let me tell you something, it is night and day. It is night and day in the way that I'm being treated now. And it is night and day in the price things cost me. It was shocking how much things cost down here. I was paying New York City wages on a long holiday weekend to get shit done. And it didn't seem to make a lot of sense. So many nice people. You need something done? I can help you. I know people who can get that done for you. We can get that done. So they call somebody who then comes over and says, okay, we can do this. But I have somebody that can do this for you. All along the way, everybody who's recommending is taking a piece, taking a piece, taking a piece. The person who does the job at the end makes almost nothing. So as a good example, I had some people quote me on my roof because it started leaking, which in a rainy country, you got to pay attention to your roof because it rains a lot. So it was leaking. I had somebody come over, and if I buy all the materials, it was 2.7 million colones, which is at the exchange rate somewhere above $5,000 to do the whole roof. And you think, well, okay, that's a big roof I got. I got them down to 2.3 million colones in the conversation, but I had to buy the materials, and I had a material list that would have cost me quite a bit. I bypassed all of that, and I hired workers directly. And then I bought the material based on what the workers said they needed, which was 1/4 of the material. So I know what would have happened. I would have bought all these materials, which they were more than happy to order for me because they get a discount that I couldn't get. Half of that stuff would have ended up on their truck and never delivered here. The other half would have been used here. Let me tell you what it cost. Just now, I was going to pay the materials for this. And this was a group of people who came, and then they weren't the ones doing the work. Somebody else was going to show up and do the work because the guy said, well, I have to be out of the province. Something just came up, but somebody else will do the work. Of which my friend was at the gym the very next day and saw the guy there. So it wasn't even out of the country. It was a lie. It was just a lie. 2.3 million colones. I got it done for about 180,000. 2.3, 180,000. The workers, the person who was going to do the work here probably would have only made that. And these people who are just quoting stuff were getting the lion's share of it. The exploitation of the worker here is disgusting. It's absolutely disgusting what these people are making off the backs of these workers simply because they can't speak English, simply because they can't speak the language. It is absolutely disgusting. So not only did I pay them more than what they were asking, I kept them on. Now they work for me. And they don't have to worry about this kind of exploitation anymore. This is what I've experienced from day one. From day one, everybody telling you, I can get this for you. I can get this for you. I can get this for you. And this is what they give the person at the bottom. And this is what they take in the middle for doing nothing except exploiting this person at the bottom. That's the disgusting part of this culture. An absolutely disgusting culture when it comes to that. I got no patience for these people. There's my tirade. There's how it's going in Costa Rica. But I've broken the code. I've solved the problem. I've gone past these people, right to these people. And these people I have, they know other people. They know other people. They know a whole bunch of other people. I can have a crew here in no time, right? I'm telling you something. If you want to find an inefficient market, it's this country here. It's extremely inefficient. If you're aggressive and you want to build a good business, come on down here. And you only have to have two
two strategies. Number one, show up. And anybody who has ever spent any time in Costa Rica or tried to get anything done in Costa Rica will understand what I mean when I say just show up. If you say you're going to be here Monday at 9, just show up. That itself is just bloody magic in this country, is to freaking show up. Just show up. And number two, be honest. Show up and be honest. You will own this country. You will own this country. You will own it. And treat those people who are actually doing the work like human beings. Treat them well. Give them their share. And you will get loyalty like you wouldn't believe, because no one treats these people well. No one treats them well. You have these people that absolutely exploit those people. They do nothing. They work. They don't do a damn thing. They don't lift anything. They make that person do all the work. They give that person peanuts, and they make this much off that person. And they don't care how that person lives. They don't care how that person eats. That's disgusting. When you break through the veil and you see what's going on, the disgust that I feel for the majority of the people that I've met here is unparalleled. Just the sheer disgust that I feel. Now, I'm really hoping that none of them are listening to my live feed right now, because I'm still here. And I still got to get through the next 10 days before my flight leaves. And it is a corrupt country. So maybe I've said too much. Is there anybody on from Costa Rica right now? So there's how Costa Rica is treating me. What was most interesting to me was how Roaring Kitty kept composure, make jokes while losing nearly $250 million during the live stream. Yeah, I'm skeptical. I'm skeptical whether or not there was a position. I'm skeptical whether or not it was real. You're on E-Trade's platform. Why not just use their chart? I've used E-Trade, but what struck me as odd is he said, I'm going to do it. I'm going to call up a chart. Should I do it? Should I do it? I'm going to do it. It's like, okay, stop with this nonsense. So he called up the chart, and I said, it's not an E-Trade chart. Why wouldn't you call up an E-Trade chart? The chart shows your position. What's going on? I'm skeptical. I'm skeptical that you would make a big bet like that with kids and a wife would let you, and you'd act that way. I'm skeptical that it's even real. I mean, I don't know. I have no way of no basis on which I would say it's bullshit, but I'm skeptical. I've made big bets before, and I can afford the bets I make, but still it's hard to keep your composure, especially a big bet like that. Your only bet, one big concentrated bet on every penny you got. I don't know. Anybody else skeptical? If anyone uses E-Trade, is anyone else skeptical? Maybe you can answer it. Why didn't he just use the E-Trade chart? I don't understand that. Didn't see the live stream, but now I'm curious. Going to set aside a bit of time to check out. He's got a great intro. My God, the intro was great. When it finally went on, the countdown to zero and those drums banging, and all the little cat pictures. There's one really cute one where the cat's coming out from inside the box like this, looking up. And I thought, what a great intro. I mean, he's pumping everybody up, and I thought he'd come on strong. And it was this, you'll see. It was almost like he had a lawyer, because he kept looking this way. It was almost like he had a lawyer sitting over there doing this thing, and he didn't know what to say. He kept repeating the same things over again. It seems like he had a script and a plan and had to go out. And since he has no real experience being in front of an audience, like in front of a classroom or public speaking, I think he just choked. But it was not good. A lot was lost, not just the money, but a lot in the opportunity that this would have given him to springboard into something else was lost. It was sad to see.
Is it possible he's still playing chess? Yeah, well, it's one hell of a game he's playing. I mean, to say that I'm going to go on and I'm going to do this crazy thing that causes the stock to drop, and then I'm going to move this way is all on a $180 million bet. To me, is bold. I mean, as bold. Do you think Keith Gill is actually as stupid as he seemed in the interview? Well, it wasn't an interview. It was just him being arrogant enough to stream after his lawyers told him. Well, I'm thinking his lawyers probably told him to shut up. And I'm thinking he still went on thinking, well, I got to go on, but I won't say anything. And I think that's what happened. And I think he didn't have the practice in life of being in front of an audience and being able to improvise with an audience without actually saying anything. I think he didn't have that. Or maybe this was the best he had. I don't know. He's got a CFA charter. I don't think he's dumb. No, he does have a charter. How much do I have to pay you to join my hedge fund? I'm hiring for a managing director in my research department. I have had that offer quite a lot, believe it or not, on the research side. And I've had it given to me in terms of contract. If you're available for, a Sunday afternoon scrum or a Monday morning scrum, like how much would it cost for you to just give your opinion in meetings? And I've declined all of those because it's not something you do lightly. There's real people and real money involved in these things, so it raises your game has to be raised. There's an obligation you owe that other person beyond any money that you're making. There's this moral obligation that you owe to do your homework, and I don't know that I have the time to do it. I don't know that I would have the time to do it right. I've been offered positions on boards, on advisory boards, on all sorts of things. And I'm always flattered whenever I get those offers because I think, well, why me? But I do understand that it comes with a responsibility. It's not just a title that you say, yeah, okay, I'm on this, I'm on that, I'm on this. And it's not for my glory that I would do that. Obviously, it has to be for yours. So it comes down to I can't do anything halfway, and the weight of the obligation. I know my personality. The weight of the obligation would weigh on me. I couldn't just show up, hang out for 5 hours, and opportunistically say, "Well, what about this? What about that? What about that?" I couldn't do that. It would have to be so much more for me that it would be it would consume me. It would be the one thing. Everything else would go away, and that's the one thing that would consume me because of the obligation, because of the responsibility. So the best way to avoid it is to avoid it and say it's just not something that I would do, because it's not something you do on the side. It's not something you do as a whim. There's real money involved here and real people. So if my market outlook helps in any way, if my new positions give you ideas in any way, there you go. That's wonderful and beautiful, and that's all free. So regarding why Kitty wasn't using E-Trade charting is probably because he's used stock charts since the inception of his stream and even has several shortcuts built in, so likely habitual. Yeah, that's as good a reason as any, I'd say. Sure, I'll accept that. Probably making true positions from that platform, but I hate to speculate. Yeah, it's the big unanswered question is, where'd you get the money? Right? It doesn't add up. Where'd you get the money? We'll leave it at that, I guess. Thinking to start 20K investment, 60/40 index level ETF with sector tilt. But while I go through your applied level videos, I get confused which factor do I need, which factor investment do I need more?
So you're starting. What I recommend is you take a market position. Don't lean in into any one factor at this point, because how do you know which factor is in favor or will be in favor? Like if you're buying an in favor factor, you're probably overpaying for it, which means the return to that factor isn't going to be as great as you think. You have to find an out of favor factor that will be in favor. Is that size? Is that small cap? I don't know. It seems to have been large cap for quite some time. It seems to have been value. You could also argue it's been growth, but I would say what looks like growth feels more like momentum to me. That if you controlled for the momentum factor, I don't know that there is much of a return to growth as much as there has been to value. But value rarely has momentum. Until you know what factor exposures you want, unless you're in it for the long run, in which case the biggest paying factor has always been momentum. By far, the biggest paying factor has been momentum. But when momentum is out of favor, it's also the biggest losing factor, is momentum. So I would look at a 60-40 SPY, and I don't even know if I would use a TLT index as much as I would just buy a zero coupon bond with a duration of 18. An 18-year zero coupon bond, you'll have the same duration with a higher yield, no management fees, which means it should outperform TLT. You have an opinion on the data science for investment professional certificate from CFAI? No, I do not. I don't have an opinion on that one. I think I saw the table of contents at one time, and I thought this looks like a statistics textbook from an undergrad course, because it went through the different types of regression that you would do, because really, I mean, that's heavy what data science is going to be doing, right? But I don't have an opinion on it from CFAI. I will say that there is probably, before you, unless there's a reason why you need to signal the market, I don't know why you need a certificate, right? There's lots of free data science courses on YouTube from well-recognized universities, MIT, Stanford, lots of data science courses where the universities put their whole course online. There's lots of them. So if it's to learn data science, go ahead. But if you need to signal the market, well, then that's why you would want the certificate. But if you don't need the signaling device and you just need the knowledge, it's free on YouTube. And I think in a more rigorous way. How would a retail investor get exposure to naked CDS? You don't. Not CDS. It's OTC, and you need to be a significant counterparty. A dealer's not going to open one for you, and they come with certain minimum sizes. This is not a retail market. It's not a retail market. When I want to trade options for income, is it possible to get 9 to 10% a year during a low IV environment? Yeah. Easy. Yeah. I'm a CFA level 2 candidate. The applied, so there's anything to learn after that. Yeah. I can only do so much. Experience will do the rest. You can read a book on swimming all you want, written by the best swimmers in the world, but until you get in the water, you're really not going to know swimming. And it's the same with trading options. I can tell you certain strategies and what to do, but once you start, it's a different feel that you get. You're now on the surfboard and you have to ride the waves. You have to learn how to ride that market. So experience is something I cannot give you. I can save you from a whole bunch of bad decisions, but I find that giving advice oftentimes is a waste of time, because advice is only recognized as good advice after you need it. Oh, I wish I would have known this then. And you say, but I did tell you. It's just you didn't have the problem, so you didn't recognize it as good advice. But yeah, 9 to 10%. I would say that you're targeting a very low return. with options, a very doable return using very low probability or I'd say high probability wins with low probability losses. You can get that done with 15 delta, 10 delta puts on very deep value stocks and get 15 to 20 a year, never mind 9%. 20% a year is a target that I strive for in everything that I do, because I think that that's a reasonable place to be. 9 to 10, yeah, without a problem. I mean, if you had followed me just on AT&T and you sold $17 puts in the months that I sold $17 puts, they were never put to you. Naomi is still here with me. She's been selling the $17 puts on AT&T and making money on that without a problem. Yeah. Yeah, that's an easy question to answer. I'm not being hyperbolic, but that's an easy question to answer. 9 to 10%. Do you prefer bridge or poker? Poker. I don't know how to play bridge. When the Fed buys assets, it can be considered as money printing. I wouldn't say money printing. It makes it sound like you're actually printing money. I'd say money creation in bits and bytes. I mean, it does add liquidity into the system. I mean, you can make the argument both ways that it is and it isn't, because if in buying assets, it allows the Treasury to issue more than it normally would, you can clearly make the case that you are creating money out of nothing. Which, by the way, the Fed has done how many times since 2008? So I'll let that one go without getting too academic on the definition. Is yeah, okay, yeah, you could say that. You CFA charter holder? No, I'm not. I can't find on the members directory CFA website that you're a charter holder or not. No, I'm not. That's why you can't find me. Workout time for me. Looking forward to watching the rest of this later tonight. Okay. Where do you get S&P Global Forward, OE, and surprise factor of the market? In the description below the video, drop down the box. You'll see a link to the S&P spreadsheet. It just downloads for you. And then this week in earnings, if you download this week in earnings, I think it's like page 2 or 3 when it shows earnings at the very bottom. It shows the surprise factor, 8.1%. I think it's on page 3. Yeah, page 3. What happened to the CFA charter holder subscription on your site? So, I'm sure you know by this point, I don't own markmeldrum.com, right? I sold it 2 years ago to Serify, which is a company that owns a whole bunch of designations. And I brought up the idea of a charter holder subscription, and I explained the benefits of it is that, we have level 1, level 2, level 3, and then we say goodbye. There must be something we can do to keep them. I mean, that's a big market that we're saying goodbye to. They want to keep up on the content. Why can't we develop a package for them? And it was a good idea. But I do not have final say. I do not have final control, and I am not in a lot of the meetings, so I don't actually hear all of the reasons. They must have had the reasons, and they must have been good reasons why they didn't want to do it, or maybe they felt that it was too early to do it, or they wanted to do it at some other time, or wanted to do it in some kind of different incantation. I don't know. Or wanted to do it in a way that coordinated across a bunch of different designations as opposed to having a lot of one-off strategies. I don't know the answers to these things. I'm not an employee of Serify, so I am not included in the email chains, and I am not included in on the conversations. Why would I be, right? I'm not an employee. So all I can do is say, hey guys, here are my thoughts. And
they take it from there. And if they don't think it's ready for them or something they want to do, well, then what can I do? It at the time of discussion, it seemed like everyone thought, yeah, this is a good idea. So I got excited about it. Okay, well, here's what we're going to do. And it didn't work out. So unless I've learned over time that unless I am I am fully in control of the final decision, it's not worth talking about. So that's what happened. But that doesn't mean it's dead. It just means I'm not included in on the conversations. Are you considering hiring Keith Gill as your expert analyst for the meme sector? Can that guy even be managed? I mean, can you even manage that guy? Besides, if he has the wealth he has, he's certainly not going to worry about working for money. If he has the wealth he has, he's not going to do it. 46, 45 car puts get put to you in June. Will you start to get concerned about how large your position is? Nope. No, I will not. I will not. I'll take 200,000 shares. Thank you. I will not. I will not. Just let me give you a sort of a good analogy of what this means for me. $1 million position. Actually, it's about, imagine a $900,000 position. Pays every month $31.25, about just a little over $3,000. Now, the reason I chose 900 is because I want you to think about the price of an average house these days. If you were in the Toronto area, 900 doesn't really get you anything. Doesn't really get you much. You'd have to go into Brampton and to find something for 900,000. Now, buy it for 900,000 and ask yourself, how much can I rent a $900,000 house for? And then after I get my rent, I pay my property tax and insurance. How much would I have left? Would you have $3,100 a month left on that? You would not. You cannot in Toronto rent real estate, buy the property and rent it and get that kind of income. But I can with CapREIT, and you can with CapREIT. And I don't have to show the apartments. I don't have to clean the apartments. I don't have to kick anybody out. I don't have to fix anything. I don't have to do a damn thing. On the 15th of every month, I get my rent check. The dividend at the end of the year, half of it is called return of capital. Half of it is called capital gain. It's not a dividend, which means I'm not paying on an unqualified dividend. Half of it is return of capital. That's free. That's just return of capital. It's going to get smuggled into a capital gain later. The other half is a capital gain. Beautiful. So it's a nice tax efficient distribution. CapREIT's strategy, because they can't raise rents much in place like Ontario, you're limited to 2.5% rent increases, and you're getting this kind of rent control in a lot of places. How do you get around rent control? CapREIT has a beautiful strategy for doing that. So it'll have a building that's fully rented, that they cannot, the turnover in there is really low because nobody wants to move out, because nobody wants to pay higher rent somewhere. So they can't raise rents. So what they do is they sell that building off as they build a new building. Now, when they build the new building, there's no rent control on that new building. Everybody they put in that new building goes in at market rents. So if these people aren't going to move out, let's build another building, and then let's sell this one, and then re-rent these apartments, substitute these apartments for these apartments, now at market rents. So it's this capital recycling that goes on, and the way they can increase their average monthly rents at a higher rate than what the rent control will allow them to do it at, in a market where you have a structural shortage of housing. What's not to like? So yeah, I'll go to 200,000 on this one. I have no problem with this one. Very low level of debt compared to other REITs, very low payout funds from operations. And the CEO was very clear
in his strategy for debt is that we will not lever up. We will not lever up. Beautiful, beautiful. Their cost of debt is extremely low, and rates are now coming down. I don't know that I would buy anything else at this point. I have no problem with them being put to me. I'm looking to sell more puts on this thing. If Monday and Tuesday I start seeing drops going into the Fed, I will sell even more puts on this one. I have no problem loading up on this one. No problem. I have no problem with $5 or $10 million position on this one. None at all. High conviction. They're apartment REITs. Apartments can't be outsourced to India. Sorry, India, but you can't have them. They can't be outsourced to India. And because Canada brings in more people from India, we're not really outsourcing our apartments to India. We're insourcing Indians for the apartment. What's not to like? I mean, come on. Let's see. Perhaps begin selling some upside calls. Nope, I will not sell upside calls. With about 100,000 sitting in a checking account earning 0% interest right now, bad place to leave it. Do you think it's a stupid time to put it in the market? Even if you don't put it in the market, put it just instead of leaving it in the checking account, put it into an Interactive Brokers account. Interactive Brokers will pay you, what is it, almost 3.5%, 4% a year just to leave your cash there. You don't actually have to invest it in anything. They'll just pay you every month. You're giving up, quite a bit of interest every single month. You're just giving it up. So no, get it out of your checking account. And what time we got? Okay, we'll answer a few more here. So I'm going to scroll all the way to the bottom and then I'll scroll back up because we're coming up on 2.5 hours. Any thoughts on Smart Centers REIT? SRU, I am familiar with that. It is hugging into the 20s or staying in the 20s for quite some time. Grocery store anchored retail REIT, and they're not going anywhere. They're really not going anywhere. I did own them for a while before. I don't know that I would want, if I spent money on Canadian REITs, it would be hard for me to say, let me buy 100,000 of this. And I would say, but why not buy another 100,000 of cap rate? Like, why not buy more of this one? I don't know that I would care to move into other REIT spaces at this point. But it has held the 20s quite well. I think last time I saw it was what, 22? Well, we can look and see where it is here. It's still probably on my list of REITs. I do keep a list of them. Oh, I'm on the wrong system here. Yeah, I'm on the wrong system. SRU, no, here it is, 2243. Yeah, they've been holding up quite well. They're not revisiting the October lows, which was down around 21 to 20. They've been above 30. I think they do have options, right? Yeah, they do. Looking at the Julys, I'm not getting a price. It's Toronto mark. No, this is the Montreal Exchange. With the there it is. I can look at the last closing price. The 2250s for July. Yeah, 40 cents. There's not a lot in there, but there's not a lot of volatility on this one either. So, if we believe the efficiency of the market, just based on the ability to hold their price, we must assume that the market, or at least the investor base in here, has done their homework and feels there's value here. Let's see. What tax implications are of owning cars as a U.S. citizen resident are
Now, I'm not really 100% sure on this, but I think for the apartment REITs, I think it is a Canadian only. I think it's Canadian only. I'm not 100% sure on that, but it might be disallowed outside because when they do have press releases, it says for Canadian release only. Sometimes it explicitly says not for US release. So being that it's not for US release, that leads me to think that might be disallowed as an investment. I know that I'm in some private REITs in Canada with redemption gates, and I can't get out because of these redemption gates, but it is a Canada investor only. And I fall into this gray area because, well, I'm not in Canada now, but I was when I started. So they really can't keep me in. So you get bumped up to the next redemption gate, which is all December. I'm out. So let's assume SEC was on the stream. What exactly would they go after Keith for? If he said anything that could not have been supported by the fundamentals, if he said anything at all, because he's got a large position. So if he said anything at all to hype the stock, that could have been a problem. That it could have been seen as, now, if he said anything at all and has any plans of selling his position, that's a huge problem, right? Because now you have to defend yourself against a pump and dump. Why'd you live stream? Why didn't you just issue a written report? Why'd you live stream it? Why did you had 650,000 people on? You're a charter holder. You should have had a reasonable expectation that your words could move the market. And you sold some that afternoon, and later he's got to get out at some point, right? You say anything, it's going to be difficult to defend yourself against manipulation, against pump and dump. What could he say? I mean, what could he say? I still think there's questions that are going to be asked. The number of times that the stock was halted during that live stream. Okay, one more question here. Please no blockchain. It's a solution looking for a problem. I believe that too. It is a good solution looking for a problem, or it's a solution for a problem nobody has. Yeah. I can think of only one use case regarding legal disputes. Yeah. Any plans to consider Middle East? In terms of living there or in terms of covering it? Neither one. For no other reason than it's just so very far away. All right, one more and then I'm going to let it go. Did I miss your thought regarding the Bank of Canada 25 basis point rate cut decision? I expressed my thoughts last week on the market outlook before the rate cut. I felt the Bank of Canada really had no choice. I think it was the right decision to do. If we accept that monetary policy works with a lag, this rate cut's not going to have effect for quite some time. So we have to think about, well, where's the economy going to be in a year? And that would be the wrong time to lower rates if we think it's going to be bad. Let's start lowering rates now, and hopefully we can avoid what we think might happen in a year. So you can't say monetary policy works with a lag on the way up when it's not affecting inflation, and then suddenly say, well, we need to see inflation at 2% before we lower it. What happened to the lag business, right? What happened to the lag? If you think, well, inflation is going to be coming down over time and monetary policy works with a lag, so do the cuts. So start cutting.
Bank of Canada, I don't think had a choice. I think they had to cut. So I think I've given my opinion on that already. That is it. We're done. It is 7:49 in Costa Rica, which is 9:49 in New York City. New York City. I think you say it like that, right? New York City. Everyone in New York calls it New York City, I think. Anyways, I will see you next Sunday. Next Sunday, by the way, is my last live stream from Costa Rica. The next Sunday, I'll be back in Canada for a number of months before I'm back down here. Ciao.